The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots, and I am joined as always by the brain trust himself, Mr. Chase Taylor. And wouldn't you know it, Jim Cramer finally comes out and says it's time to buy everything uranium. And I was doing another interview on another podcast today, and I got asked about this, and I broke out in laughter. Took probably a good 5 to 7 seconds to pull myself together. And the guy's like, what's so funny? And I go, well, and you and I were on this trade together, but I remember my first foray into Cameco was about 5 years ago for, if I want to remember correctly, right around $8.50, right? Jimmy jumps on the train when Cameco hits 72. A 9x return, literally a 9x return, then he's interested.
Yeah. Now that the valuation is actually pretty stretched, it's go time.
You can't make it up. This is the same cat that said, and I'm not just trying to beat on Jim Cramer. The reason I think that these things are helpful is because I think he is emblematic of so much of the market, right? Oh, yeah. It is so similar to
T-Rex.
Yeah.
Only see it if it's moved.
Yeah, that's right. There you go. It's a T-Rex. That's a good one. It's so similar to oil being uninvestable at $18 a barrel.
I'll never forget that one. I featured that tweet in my big write-up about oil back in 2020.
So you and I spoke that day or the night after he said that, because I remember a conversation specifically where I was like, we're going to increase our oil holdings. Like literally because he said that, where I was just like, it just reiterated to me, wait a second, you're probably never going to get a chance to buy oil this low again for
ever,
maybe ever. Yeah. I mean, other than the one thing I always
when for a month went negative, I mean, that was just the ultimate sign.
And that's when it's uninvestable.
And that was when everyone was so sure it was in deep trouble. I still have saved screenshots from that period of some of the craziest stuff people were saying. Like even IEA, EIA, like all the big boys, that forecast demand were like, they said like demand had reached its peak for the rest of time. Like you would never have a higher demand print. I just remember being like, what? The
same people said supply had reached its max. I still remember peak oil.
I remember peak coal, and coal is still growing.
Yeah. Yeah. And like I said, I don't point that to blast people or to make fun of him. I point that out because value investing or investing for fundamental purposes has become much maligned, and for a lot of understandable reasons, right? But it doesn't change the fact, one simple fact, as Buffett reminds us all the time, is the number one corollary, the number one determinant of your investment outcomes is the price you pay. And investing should be a game of buying the thing that nobody wants, that they're eventually going to need.
Right. It's the reason I use the certain chart pattern that I use, because it captures that like fundamental backdrop on a chart, essentially.
The other thing, really interestingly enough, especially I think as it relates to commodities, is we still own uranium, but we don't own it anywhere near the size that we had. And why? Because you've reached a price point here where, look, it wasn't fun owning the stock. Okay. Like I will admit that. But from a fundamental level, when you're buying good uranium miners back when the market price was $27 a pound and the cost of production was 60, like,
yeah. And it's not just uranium either. Like now that you have the NKZ ETF that captures the industry players, the SMR guys, all that stuff. So if you go look through like a momentum screen right now, it's capturing all that stuff.
Yeah.
So any momentum book is going to have a bunch of SMR companies and like power producers in the nuclear space. So like it is one of the hottest corners of the market right now is that whole industry. So it goes from no one even knows about it a couple of years ago to like hot part of the market. And most of those SMR companies are pre-revenue, just, they're a science experiment that most of them won't work, but yet people are throwing large money at them.
Stupid amounts of money. And I don't, I really do not believe that game is on. And I don't think we're going to relive that again. And I think there's several different dynamics, but I think that, again, it's not like everybody, had a powwow and decided we're going to start looking at things rationally. I just think you reach this break point now where you're looking around going, guys, when you look at some of the valuations out there and you look at what it is, right? We're not talking about crap companies with crap multiples. We're talking about just great stuff out there that, because it has been so ignored, look, there will be irrational price moves. I mean, Tesla's a classic example. Tesla announced that deliveries down another 13% this year and the stock rallied 5%. Now, it did that the exact same thing the last time it announced a bad quarter. What I'm saying is, you want to kind of like warn investors that, guys, I think this market is in the process of getting back to some form of normalcy that more resembles what investing is, as opposed to just being a popularity contest. And like you said, just everybody being a T-Rex, just chasing what moves, right? That's been the winning combination for a while. I don't think we're there anymore. And, I think we're kind of getting back to a little bit more of a traditional place where I think the big opportunities are finding the things that are just irrationally cheap that nobody wants for no good reason. I mean, we were just lamenting one of the oil companies that we own. I mean, you look at this thing, financially, the thing is a stalwart. I mean, fortress balance sheet, massive amounts of cash flow. And while we're sitting there, the stock hasn't done anything except frustrate us, but it's paying a 14% dividend, for God's sake. When I'm buying deep value in something like that, and I'm getting a 14% dividend that I feel very confident they can defend because it's not pressing their free cash flow at all, it's hard to lose on an investment like that. Meanwhile, you want me to speculate on something like Tesla, a car manufacturer trading at 180 times earnings, it's rallying 5% because deliveries are down 13?
And they're going to fall 2 years in a row.
Yeah. The other thing too is we didn't pull our short on it. Now, I might after tomorrow. Yeah. I might after tomorrow. Yeah. But if it's like the last time, same thing happened. When you see a company with a multiple like that rally on bad news, I'll take my chances on the short side. Now, watch, I just made sure. I'll probably check after hours. It's probably up 10% in after hours. But give us a rundown on the indexes.
So S&P closed up 0.47, Q's up 0.7, small caps in beast mode up 1.39, equal weight only up 0.23, Mag 7 up about 1.5, all world ex-US up 0.33. The dollar was not red today. That's a big deal. Up 1.14. It had been down like a million days in a row. Pretty big day for Bitcoin. You're up at 109,000 now, up over 3%. Oil up 3%. Dollar not down, and yet gold, silver, platinum, palladium, copper all up. So that was kind of notable. Gold only up 0.3, but silver almost 1, and platinum up another 5.5. Palladium up 4.9. And copper up almost 2%. Up, you're up like 520. So like it's getting interesting. And when it comes to yields, you had the 2-year up about 2 and the 10-year up 4. The 30-year at one point was like up about 7 basis points today because we had a blowout in the UK of 20 basis point move higher in their long end. But that kind of cooled off by the end there. And vol was pretty flat on the day, down a little bit. You're at 18.56. You gotten real sticky in the 18 handle on front month vol.
Something interesting that I was thinking about with crypto, if you look at just the coins, right, you're right around $3.5 trillion, right?
Yeah, it's about right today.
Start out in the market cap of the publicly traded companies. I bet everything and all, you're probably pushing toward that $4 trillion mark. Okay. It's digital gold, right? If you add up every single publicly traded gold mining company, they traded a discount to Costco. So if those things are really digital gold, I can't, I've always been a skeptic. We own a little bit of it, all that kind of stuff. I can't shake the feeling that some really big carnage is in for crypto. It's just too many people. I'm listening to Hugh Hendry, smart investor who I respect. I've had him on the show before. He literally said, I'm selling my house. And I'm sure he's being facetious, but he was like, I'm selling my house. I'm putting everything in Bitcoin. This thing's going to 10 million, da, da, da. And I'm just like, yeah, I'm going to call BS.
Yeah.
There's too much certainty, man.
Feels like some click farming maybe from our friend in the Caribbean.
Yeah. Well, the other thing too, is I sit there and I'm like, guys, just because something has gone, I mean, if we used your rationale, like the most valuable asset that all of us would own was tulips. Now, granted, I'm not saying that there's like, I understand all the crypto arguments and
yeah, the digital gold viewpoint is not insane for Bitcoin.
And
maybe one or two other coins that have some use case or whatever. But
I listen to these guys talk about crypto and I'm just like, how do you look at that universe and decide that that universe has $4 trillion of utility? Where? Doing what? I mean, if we added up the banks, how big is the banking sector in the United States?
That's probably pretty big.
Well, I bet you it's probably about 12 trillion.
I can look it up.
Okay, so the banking sector in the United States that literally underwrites the world's financial system is only worth 3 or 4x the crypto universe? I mean, just think about that. People are like, it should be worth way more than the financial, and you're like, what?
Yeah, it's pretty close. You're about 11.
Look at that, folks.
That was impressive. You looked it up before we came on, but that's fine.
Shot from the hip. No, dude. No, are you kidding? Do you know how many freaking pie charts of sectors on the S&P we're looking at constantly? And you don't have to, because you're not the one that has to do the.
For me, no.
Yeah.
Although that's not true. I've made a few for you.
You have.
Turns out. Turns out the head of research does some research around here.
I've always had this weird thing too, that for some reason numbers stick. Like like one of the big jokes in the office. Now this is when I was really the only one bringing in new accounts, but I could never remember a name, but I could tell you exactly what the balance of somebody's portfolio was and everything in it. Just like I remember, you know what I mean?
Yeah.
I don't know what that's.
I'm a picture guy, so I can remember a chart. I can't remember a number for anything.
Yeah. Weird. You can remember a chart.
There you go.
Shocked.
I'm a visual learner only.
Should change your name to Chart Taylor. Anyway. And we own a little bit. We've traded it extremely successfully.
I mean, it's a wonderful
trading
liquidity proxy. So whenever it's crazy not to use it as a tool.
Yeah, I just don't.
All right, two things we definitely got to talk about: ADP jobs and the Vietnam air quotes deal.
Hit us off on ADP jobs.
Yep, ADP was expected to come in at positive 98,000 jobs created. They came in at negative 33,000. And more than all of that was from services jobs. Goods producing jobs were positive, and then it was very negative for services. Education and healthcare got hit really hard. And if you look at that chart that has just gone from wildly positive to all of a sudden a massive problem on ADP. And I would expect that to become a problem eventually at some point for non-farm payroll between, the Department of Education issue and then what I talked about yesterday with the potential, because it's not passed yet, healthcare headwinds that come out of the reconciliation bill. Like I could see that kind of continuing. So will this have anything to do with tomorrow? Probably not. But what I will say is if you chart ADP and non-farm payrolls, the big official one that comes out that everyone actually pays attention to for markets, are they always the same or close? No. In fact, monthly, the variability is super wide. I wouldn't be shocked if ADP or non-farm payrolls beats tomorrow. But if you zoom out, they absolutely trend together. So the fact that the ADP trend is very, very ugly tells me at some point non-farm payrolls will have to gap down with it. So worth noting, even though no one else cares about ADP, that it's showing a lot of softness. The other thing,
the other thing why I think you have to pay attention to that, and again, we'll always say, don't ever be the Pollyanna that's freaking out over one metric. You got to look at all into entirety. Concerning part about that is that seems to meld and rhyme a lot with the kind of things that we're seeing, right? You look at the issues in housing, you look at that, and you're like, look, I don't see a black hole where things need to collapse, but I see some very large obstructions as it relates to continuing to add jobs.
Right. Clearly. And it's, we weaken a lot. And another thing that kind of rhymes with what you can kind of observe is the biggest weaknesses in the smallest firms. So the smallest businesses out there they're under a lot of stress. They're under a lot of pain. And that's been that way for a while, but it continues to be a pretty big gap between how bigger businesses are doing versus small. The smallest 50 or less employees were very negative, and companies that have a whole bunch of employees, like kind of the top, quartile, decile, whatever, they added a bunch of jobs. So that's kind of a nasty, split.
Yeah, but then you're seeing prints from like Microsoft laying off another 9,000.
Right, that's a lot. Yeah.
That's a lot for Microsoft
for a company that's growing.
Well, that's what I'm saying. And you're talking about AI positioned, right? You're sitting there going, I think, in my opinion, I think they're looking out and they're probably seeing a lot of the same things we are. I think they see that, the sailing isn't going to be quite as smooth and easy going forward. I think that there's a lot more risks. I think that,
and it's one of the reasons you can't count out really crazy right tail stuff from tech is, they're already very employee light companies. They've been growing their earnings, growing their margins, and keeping headcount flat to down, which is wild. But the other thing I definitely wanted to talk about is we had sort of a deal announced today with Vietnam, trade deal. It's definitely light on details, and maybe they are or are not forthcoming. We don't know. But what we do know that what they got announced was that they're going to have no tariffs on our stuff. We're going to have a 20% tariff on their stuff and a 40% tariff on anything that we deem to have been transshipped from China through Vietnam. So to be conservative, let's call that a 25% effective tariff rate. And it may end up being closer to 30 or something because they do transship a lot of stuff. Nobody knows who's responsible for determining that, how they're going to do it, all that kind of stuff. But
if those tariffs, like at that level, 10 to 20%, if they apply to things in a broader sense, like for instance, if they applied to automobiles, that might offset like Elon's loss of subsidies here in the United States.
The problem with that is if I'm understanding what you're saying is, having Vietnam's a tiny market.
Our subsidies make his cars less expensive to buy in the United States. If you remove those subsidies away, but you flip them over on tariffs to foreign cars coming into the country, you could have a wash effect.
So we already have a 25% tariff on all cars coming into the country, period, because that's one of the 232s. Yep. So, what's important to me here is there's been a lot of debate about, are tariffs just here for negotiating, or are they going to stick? Are we going to have, 10 to 20% effective tariffs moving forward, or maybe even a little higher or whatever? And there's been obviously multiple camps. Some people are like, oh yeah, we'll basically barely have any tariffs. Once this is all over, we get all our deals lined up, the tariffs will basically be gone. And then we had the reciprocal argument of you take yours down, we'll take ours down. Well, now we have this deal that might be, a template of, you took all of yours down and we still are keeping 25. And I mean, to me, in my opinion, if you've listened to the administration, they made it very clear this is the way it was going to go down. Senator Kennedy was grilling Lutnick about this in Congress, where he asked him straight up, hey, if this country, he may have even said Vietnam, pulls down all trade barriers to zero, nothing. There's no tariffs, no non-tariff barriers, nothing. Will we pull ours down too? And he's like, absolutely not. Made it clear, we're going to keep tariffs. Part of it is because we would still have a trade deficit, and it's almost like just viewing a trade deficit as bad on its own. So this looks like a 0 and a 25 for Vietnam. The 0 doesn't do much for us because it's a tiny market. We're not going to sell a bunch of stuff to Vietnam. But keeping that 25 is going to be, it's a meaningful number. Now,
It's kind of like NAFTA in reverse.
like the Nikes of the world were up today, meaning that tells you a lot of people thought this could be worse. So that, to me, that's notable. Maybe the people are just happy that it's over and they can pencil out the math or whatever. But
You're also just gloating because we bought Nike on your recommendation.
yeah, well, it wasn't because I thought anything about a Vietnam deal. I can assure you that. If anything, that scares me. But but it's notable. Like Lulu didn't have a great day, but like, you know, they do some manufacturing in Vietnam, and once the news hit, it jumped. So you could see people that make things in Vietnam, like clearly the market thought this could be worse, but plus those things don't get transshipped the way a lot of other things do.
The interesting thing about this is I've now lived long enough to see, it's not perfectly offsetting, but it's similar because you're dealing with different sides of the debate, right? I'm old enough to remember the NAFTA situation very clearly. I still remember when Ross Perot stood up there on stage and said, you're going to hear a sucking sound, right? And I remember being very uncomfortable, unsure about where I stood on that. And we talked about this on the show before, right? Because I'm Mr. Free Markets and all that kind of stuff. And you flip around today and we're putting on tariffs on trading on countries we trade with, which is literally the inverse of what we did in NAFTA. And there's a part of you that feels that same sense of like trepidation, you know, because I believe in free markets. Tariffs are not that. Yet at the same time, free markets have been really, and not just by everybody else, I mean, we're guilty of it too, but have been really massaged and very manipulated, right? And, you know, there's still a part of me that really likes free markets, but then there's a part of me that sits there and says, you know, giving countries access to our markets isn't the worst thing in the world if the levels aren't too big. But it's also one of those things like with NAFTA where you're sitting there going, I'll be honest with you. I don't really know how I feel about it. I don't really know how I feel. I mean, I feel like I could make really cogent arguments on either direction.
To me, I on this one, I do know how I feel. And it's that you stay as free and as open as you possibly can, because that's, I mean, frankly, where the best outcomes come from. You look at global history.
Yeah, but the last 30 years would say the opposite.
I don't think that's necessarily true. But what is clear to me is like, you don't allow.
Chase, you don't think our trade policy has led to the fact that we're 130% debt to GDP and the Bible Belt is now the Rust Belt? I mean, come on.
So you could bring back all that manufacturing production is going to be mostly robots and stuff anyways. So you're looking at one side of it. The other side of it is look at all the capital that came here and look what that capital did for us.
Agreed. But the problem, the other issue you have though is that
and a lot of those people got
capital can leave a lot easier.
What is
than
the
manufacturing?
What is the unemployment rate in the U.S.?
Yeah, it's 4.2.
Right. So where's the damage? You know.
Well, I mean, you could sit there and go, we went 15 years without substantive wage increases. I mean, that's, you know, that
kept inflation low, which.
Yeah, but what I'm saying is that if you go 15 years without substantive increases in wages, it tells you that the middle class is getting pinched. Sure. And now who gets to pinch the hardest?
This goes inflation? Back to me. This goes back to Kev's argument, though. The pie has grown immensely in America in this time. How that pie is divided has become a nasty split, two different directions, right?
Yes,
and I think trade policy. Like it's part of that, but trade policy isn't the only policy that determines how a pie gets chopped up, right?
100%. Yeah. No, I agree 100%. Yeah. Right.
The point I was about to make, sorry, is
this is like so many other things that we're talking. I want you to remember your point.
I got it.
But this is like so many other things that we've been talking about lately, where it's like when we're dealing with all of these things, what we're effectively doing is we're talking about one symptom, and we're not having the broader conversations. I believe very much we're in a fourth turning type of period of time. And the tweaking at the edges that we've been able to do for the last 50 years, I don't think it works anymore. Meaning I think what it's calling for is broader structural reform.
Right. So what I was going to say is, to me, what's clear is like just pure free trade on if left to its own devices, you will be gutted in areas that you cannot allow yourself to be gutted. So obviously, I mean, we just cut off some military supplies to Ukraine, right? Not for political Ukraine war reasons, but for like, we're running low.
Yeah.
So like that tells me something about the defense industrial base, right? So like, can you lose competitiveness in that? No. Should you lose your ability to make, food and clean water and medicine and electricity and all, like stuff like that? No, you better take care of the basics, right? It's almost like a Maslow's hierarchy of needs for a country. Take care of the base of the pyramid. If you have to put up walls of protection and make sure that is sound, do it. But now if I look over at Vietnam, we're going to pay a 20% tariff on Nikes. Should we manufacture socks and sandals in America? And shoes? No, like that doesn't make any sense. So my argument would be, and this is frustrating because like I know there's people in the administration like JD that has talked about this, like hey, like let's carve out the strategic stuff. But there's nothing strategic about shoes or jump ropes or whatever that we're going to have a 20% consumption tax on. So that part I don't love.
I think Vietnam. So we'll have to see it way it rolls out because I think Vietnam's a little bit different because there is that back alley action that was happening a lot where China was shipping things through Vietnam.
And you can argue that
So maybe your argument would be then keep that carve out on.
No, my argument would be forget country level tariffs. Forget
at the strategic things that you need.
Baseline tariffs of like everyone has to pay at least X%. No. Like that's not how we're going to do this. It's going to be like, here are the 10 things we've deemed to be too important for our country. And on those, what I would do is have a quota system. So like, hey, in America, we will make at least X% of blank. And whatever we got it, you could have like a subsidy system that throttles up and down and make sure it gets there. A combination of subsidies for domestic production of blank and tariffs against the importation of blank so that we can at least hold a certain capacity to make it. That's the way I would approach it.
For instance, if you have radar or laser guided, munitions like, Patriot missiles, things like that, you should probably have the domestic capability to print the chips that make those weapon systems.
Yeah, the
viable.
Chips, the magnets, obviously kind of a hot topic. The inputs from the actual commodities themselves.
And that in and of itself could provide a lot of additional jobs here in the United States.
It would,
stuff like that.
And it would be inefficient and like uneconomic. But there are, you have to carve out a few areas where it's like, who cares how inefficient it is? Like, because if you don't take some of these things for like seriously enough, then nothing else matters. Like, you can't defend yourself. Then what are we talking about?
Well, yeah. And then you've got to look at the changing way the world works too, right? Like, so, this isn't World War II anymore where you can just mobilize, the entire economy and get everybody, it's so much more diverse. It's so much more highly specialized.
Yeah.
You could flip an automobile manufacturing plant into a plant that could make airplanes. You could do it pretty quick.
Right.
You can't do that anymore.
And you can't do that and you can't just tell, somebody to go make chips. It's like the most complex thing in the world.
Yeah. Now, great. Thank God we've got that facility going down in Arizona.
Multiple facilities now, and to include other states. In fact, maybe one of the only things that's super good in the bill that's coming through is they've upped the subsidies for chip plants. So like you'll get even more.
Yeah, and that's a have to.
We're going to do too much and have overcapacity and kind of, but it's that one's important to we got to get that right.
You have to. Like that's,
and again, if it's inefficient, you make too many or like whatever, like just deal with the consequences.
Not having chips in today's warfare is, to me, is a very similar situation that Japan was in World War II, right? Literally having no oil or energy production of their own, right? Meaning, I look at chips. Chips are like today's oil.
I think a few things are. Even magnets. Ford's is sitting there and twiddling their thumbs because they can't make cars because they don't have the magnets. Like, and there's no easy button to fix it. So like it's a multi-year lag between you being able to do it for yourself and needing them from China. And so what scares me from a like taking this too far the other way standpoint would be like a real autarkic thing where like let's be self-sufficient in just about everything, because that's where you go too far and you kind of blow out the free traders take the Ricardo stuff too far, and it's like whatever is the most efficient, you do that. But you can go the other way, and it's like let's be self-sufficient in everything, and it's like that's a great way to completely ruin an economy of a country. And, and you know
well, it's like so many other things that we talk about today, and all too often, it's not always the case, but all too often it is. What's the right position? I'm not exactly sure, but it probably lies somewhere in the middle of those two extreme thoughts, right? And that is very much the case now, right? It shouldn't be an all or nothing proposition. Tariffs will not make us rich, right? At the same time, there are certain things that we need to tariff to make them viable to manufacture here. And I, you know, you and I were having this conversation earlier. The thing that I lament the most about today is that the rhetoric is so hot. You can't have a realistic conversation,
right?
You know, I mean, that's the part of it that just really frustrates me. And I hear so many people talking about surface problems. And I'm like, guys, you can try to address that problem all you want. But if you don't deal with the foundational issue down here, it doesn't matter.
Root cause analysis is a lost art, especially in politics, I would say.
God, dude, it's so, it makes me want to pound my face against my desk.
And almost everything, you know, government does creates a new problem they have to fix. And then, you know, they break your leg and then they sell you a crutch and then they brag about the crutch. And we were talking about the Medicaid stuff this morning, and it's an example where the reforms to Medicaid create problems. So like, I'll give them credit. The solution's in the same bill, but it's like, all right, we're going to, you know, cut back on how much money we give the states for Medicaid. And then, you know, some people were like, well, hold on, that's going to like totally ruin a bunch of rural hospitals. And like, oh yeah, darn. Well, let's just make like a multi-billion-dollar rural hospital bailout fund that we can give them money out of. So like, that's all in the bill. And it's like, so you have in the same bill created a problem and then tried to solve it. And then naturally that will create its own problems. And
well, no, yeah. And then your solve is the exact same type of thinking and solution that put us in this place in the
throw money at.
Yeah, just throw money at it. Whereas what you need, and granted, again, I hate using the word all the time, but it's just so fitting. It's the incalcitrant nature of Congress, the fact you can't get anything done. But at a certain point, kind of like the point I've made about the Federal Reserve, look, I'm not saying that you're responsible for the debt and the bad decisions that were made, but you're the one that was given the anesthesia for it, right? Like, meaning you're partly to blame. And, you know, the federal government in my situation is much, they play a similar role. You know, yeah, there are all these problems. And that's the tough thing is if you listen to politics, everything is just a one-off. Oh, they're doing that. That's wrong. And you're like, no, wrong. Once again, you guys are talking about stuff on the surface level. You're not leveling with the people. We have a system that is defunct and cannot function, right? Our entitlement system will not work. It's mathematics. Okay. It's broken. It needs reform. Our immigration system, we're not a few ICE patrols away from fixing it, right? The people that are all against it, I think the vast majority of them do not understand the nature of the executive branch and what they're like I've already said, I would prioritize other things other than raiding Home Depot. But at the same time, you're like what you need to do is address immigration, but Congress doesn't make that viable. So what are you left to do? And that's, and I'm not like, you see those problems on both sides of the aisle. You see the recalcitrance on both sides of the aisle. But at the same time, you know, buying up a bunch of houses, you know, buying up a bunch of property in New York and making them public communes. These are not answers to problems, right? They're not. These aren't serious answers. And if you really want to get down to brass tacks, if we want to tackle these situations, there's going to be provisions in there by definition that are tough to swallow on both sides.
Yeah.
Because you need a sort of a combined approach. May not be sexy to talk about on the evening news. You know, it's not red meat. You're not going to sell it to either side and have them all pumped up and holding up signs.
Right.
But the other thing, you know, hopefully, that's the other thing, man. Sometimes at some point we started running a government political campaigns on memes too, right? It's like the stock market. You never actually talk about anything serious. It's all just nonsense.
Yeah, everything's a bumper sticker when it comes to politics and a soundbite and, you know, TikTok length.
Other than that, things look great, right? Other than that, how was the movie, how was the play, Mrs. Lincoln?
Yeah.
Anyway, we got to roll. You got anything else you want to add to that?
Nope. Jobs tomorrow.
We'll see you guys tomorrow. As always, follow us on social media, Know Your Risk Podcast, InstaFace, Twitter, all that stuff. X, I guess now you got to call it.
I refuse, but go on.
I know, it'll always be. I'm not going to send an X. I'm going to send a tweet, you know?
I don't really say meta. I don't really, yeah.
Yeah,
I'm an old geezer now. I get it. But
it's Facebook. Get off my lawn, kid.
exactly.
Anyway, have a wonderful evening. We'll see you guys tomorrow. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.